Thanks, Raymond. Good evening and a very warm welcome to all participants to Healthcare Global Enterprises Limited's Q2 and H1 2019 earnings conference call. Today we have with us Dr. B.S. Ajay Kumar, Chairman and CEO of HCG, along with the management team to share highlights of our business and financials. We have uploaded an earnings update presentation to the stock exchanges and also shared the same through our mailers. Without further ado, I hand over the call to Dr. B.S. Ajay Kumar.
Good evening and happy Diwali to everyone. Thanks for joining on this day. And warm welcome. We are pleased to report Q2 FY19 results with continued strong performance across our business. Our existing oncology center, which have established leadership in the regions of presence, and continuing to demonstrate strong growth, profitability, and returns. Our new centers not only augment our presence in attractive markets pan-India, but are also generating strong margins, offset by recent center losses, which are nearing break-even levels as per the plan. As we near completion of our expansion and our capex cycle, with substantial investments in new centers over the past few years, we look forward to realizing sustainable growth and returns over the long term as these centers mature, thus establishing dominant leadership role in oncology and also perform as well as our existing centers are doing at present. Our fertility center named Milan, we continue to have leadership role in not only Bangalore, now establishing across the country, and the indicators are in the coming quarters will do well as planned. And we do see a huge potential for the growth. Overall, we are excited about continuing our leadership specialities across multiple geographies pan-India with focus on efficient execution, driving value creation for all our stakeholders. At this point, I would like to update on the Q1 FY19 business updates. Strong growth in Maharashtra driven by Nashik and Borivali centers. Borivali centers completed its first bone marrow transplant and continue to do well in radio surgery, taking a leadership role. Center is as emerging as a leader in private cancer, dedicated cancer center in Mumbai region. And we are also happy to report the way it is progressing, we are likely to see a break-even in the last quarter or the first quarter of next year. Completed acquisition of minority partner stake in Borivali. HCG now owns 100% stake in hospital entity. Continued reduction in losses from Borivali and Nagpur new centers. With all this, as you will see from the future presentation, Maharashtra has become a dominant place for HCG's growth. Gujarat continues to show strong momentum across existing centers and new centers. Commenced offering of comprehensive oncology centers in Bhavnagar, only one in Bhavnagar area offering oncology centers, an underserved market with large catchment area. Rajkot Multi-Speciality Hospital operationalized with partners and strong focus on specialties led by leading clinical team as minority partners. Also, Jaipur Oncology Center was launched as #1 dedicated and comprehensive cancer center in the city, offering high-end services and quality of care, augmenting HCG's presence in North India region. Strong revenue growth and occupancy increased in our Andhra Pradesh region, driven by Vijayawada consolidation of partners business. I now request our CFO, Srinivas Raghavan, to share the financial highlights. Srinivas?
Yeah, thanks Dr. Ajay, and very warm greetings to everyone on the call. Highlights for the quarter ended September 30. The consolidated income from operations, the revenue was 245.3 crores as compared to 211.1 crore in the corresponding quarter of the previous year, reflecting a year-on-year increase of about 16%. Operating EBITDA for the existing centers is 37.3 crores as compared to 33.2 crores in the corresponding quarter of the previous year, reflecting an operating EBITDA margin of 19.2% as compared to a margin of 18.8% in the previous year. The loss from new centers was 3.8 crores as compared to loss of 2.1 in the corresponding quarter of the previous year. Consolidated profit before other income, depreciation and amortization, finance costs, exceptional items and taxes was 33.5 crores as compared to 31.1 in the corresponding quarter of the previous year, reflecting a YOY increase of 8%. Consolidated profit after taxes and minority interest was a loss of 6.5 crores as compared to a profit of 10 crores in the corresponding quarter of the previous year. The key driver for the PAT loss in the current quarter has been the forex reinstatement of about 5.8 crores. I now request you to turn your attention to slide number 4 of earnings update presentation. The Q2 revenue grew 16.2% year over year and HCG centers by 18.1%. Okay. And Q2 19 operating EBITDA, the existing centers stands at 37.3 crores, which is a 19.2% margin versus 18.8% in Q2 FY18. New centers loss, as mentioned earlier, is 3.8 crores versus loss of 2.1 crore in the corresponding period last year. H1-19 revenue grew 17.3% year over year, and the HCG centers grew by 19.4%, whereas in Milan we had a degrowth of 5.3%. The H1 results, the operating EBITDA, the existing centers is at 712 million, 18.9% margin versus 18.3% margin in H1 FY18, and the new centers loss is about 70 million compared to a corresponding loss of 20 million same time last year. I now request Dr. Ajay Kumar to share the operating highlights.
Thank you very much, Srini. I would like to draw your attention to slide 5 of the presentation. Revenue split for our business is 93% contribution by HCG centers and 7% by Milan fertility centers. Within HCG centers, Western India comprising Gujarat and Maharashtra contribute 42% of the total revenue, followed by Karnataka at 38%, Andhra Pradesh is 8%, and East India is 7%. As you can see from this, our distribution has changed. At one time, Karnataka was heavily favored. Now, it is being distributed between Karnataka, Maharashtra, Gujarat, as Andhra, and Tamil Nadu and East India. I would like Tamil Nadu contribute 4% and North India contributed only 1%. I would like to draw your attention to slide 6 of the presentation. Strong growth continues at several existing and new centers in Q2. Vijayawada 80% YOY, Nasik 79% with expansion taking place, 79.9% YOY, Chennai 28.7% YOY, and Baroda 24.3% YOY. Substantial growth has happened in these new centers, in these existing and new centers. New centers contributed revenue of 48.6 crores in Q2. Revenue from existing HCG centers grew at 11% in Q2 YOY basis. Revenue excluding Kanpur, which is a discontinued operation, grew 20% in Q2 and 21.1% in H1 FY19 on a YOY basis. I would now like to draw your attention to slide 8 of the presentation. 165 beds added in Q2 FY19 on account of new centers. Rajkot 120 beds and Jaipur 45 beds. ARPOB of existing centers INR 34,624 against 33,463 in Q2 FY18. Continuing the reduction in ALOS to 2.27 on account of trend towards daycare procedures, changing patient profile and efficiency in the system. Existing centers operating EBITDA margin improved 69 bps to 24.4% in FY19 from 23.7 in Q2. In this area, I would also like to mention some of our centers have been star performance, including our Center of Excellence in Bangalore, which has shown 28+% margin in Bangalore Center. Looking at key geographies in slide 9, Karnataka region continues its focus on improving realization parameters. The Center of Excellence, as I stated above, ARPOB is 48.4 with 28.3 operating EBITDA margin. The Center of Excellence ROCE improved 110 bits to 28.8% YOY. ARPOB dip in region driven by scale-up of multi-specialties Hubli. With respect to Gujarat region, commencement of oncology centers in Bhavanagar offering comprehensive services, Rajkot multi-speciality center just operationalized, and EBITDA margin of existing centers at 19.1% for Q2 FY19 from 15.7% for Q2 FY18. In Maharashtra, continued strong growth of Nashik center with phase 2 operationalized and EBITDA margin at 23.4%. In Andhra Pradesh, strong revenue, Borivali and Nagpur, new centers ramping up with continued reduction in losses. And as I already commented, we are looking at a break-even in Q4. In Andhra Pradesh, strong revenue growth, occupancy increase, and ARPOB dilution driven by consolidation of partner business in Vijayawada. New centers in Vizag ramping up well. In East India, investment in enhancing quality of care at Cuttack centers, improved patient and procedure mix augmenting ARPOB increase. Coming to slide 10, covering key highlights in Milan Fertility Business Center. Improvement has happened in new registration driven by new centers additions. Newly opened center in attractive Whitefield market ramping up well. Implementation of new strategic initiative across the business are helping to show ramp up in the third and fourth quarter. It's expected in fourth quarter. I now request Srini Raghavan to explain the capex and debt highlights.
Thanks, Dr. Ajay. I would like to draw your attention to slide number 12. We are nearing the last leg of our expansion plan. Total capex for the quarter was 41.4 crores, with majority of that in HCG centers, a nominal investment of 2 million in Milan. Capex excludes a stake purchase of 23.5 crores towards minority interest of partner in Borivali Center entity. Net debt. With respect to debt, we closed the quarter at net debt of 579.6 crores, of which vendor finance comprises of 169.8 crores. This includes forex reinstatement of 8.3 crores as of 30th September 18 and 6.2 crores as of 30th June 18 on account of USD INR exchange rate changes. As on H1 basis, majority of the capex of Kolkata and South Mumbai centers are already accounted. I would like to draw your attention to slide number 14, please. In the current year, Kolkata and South Mumbai are slated to launch in next 2 quarters. With this, only 2 more centers in Kochi and Gurgaon will be upcoming for future. We do not have any more committed new centers for Milan post Q1 launch of Whitefield centers. Would like to hand over back to Neeraj.
Thanks, Srini and Dr. Ajay, for sharing the financial and business highlights. We would like to open the call now to take questions from the participants.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wish to ask questions may press star and 1 on the touchtone telephone. We have the first question from the line of Sudarshan Padmanathan from Sundaram Mutual Fund. Please go ahead.
Hello, thank you for taking my question. Sir, I think while...
I'm sorry to interrupt you, Sudarshan, but we can barely hear you. Could you please speak up?
Yeah, can you hear me now?
Yes, please go ahead.
Yeah. So while your presentation and your outlook talks about, the newer projects and the losses contributed by the, newer facilities, if you can kind of give some color with respect to, the Borivali facility and probably what is the kind of or the magnitude of losses which, primarily on account of, the facility you opened, this quarter, specifically that 140 odd, beds, Nashik and Jaipur. I mean, that could kind of give us some color with respect to directionally how the Borivali is moving, as well as how we expect, the Nashik and the Jaipur to move as well.
Thank you, sir. As far as Borivali is concerned, as you know, when this center started last October, we had indicated there will be a loss for about 18 months, and primarily because of the real estate high value of rent. But we are actually clocking well. And in this regard, I will ask Dinesh, who is the business head of Dinesh Madhavan, who is the business head of the region, to talk about it. And also he can comment on the Nasik, where in spite of expansion, we have not incurred any loss. In fact, we have continued to have a margin of 23%. The expansion has already happened. In view of Jaipur, which has just started, right now it is an oncology center. There also, we are doing well, and month on month we are seeing a good growth. And there also we expect in the next 4 to 6 months the losses to narrow. Regarding the Borivali, can you comment on it?
Both at Borivali and Nasik and Maharashtra, we are finding the expansion of Nasik with the new center has a greater acceptance and ramped up well, which is clearly indicated in terms of addition of more than about 60 beds. We still have been able to have a good financial performance there. Coming to Borivali, there are a few segments which will catch up, as Dr. Ajay said, in the last quarter of this fiscal, whereas largely for the transplant program on the bone marrow and in the radiation, we have done far better than what we perceived as per our plan. Going forward, we are only seeing that the ramp-up here will be as we expect it to be, and also take a very dominant leadership space in the private oncology space in Bombay. Borivali will see from Q2 much better than what we had actually looked at from a budgeted level, and we, as we said a little earlier, we look at it ramping up as expected.
And in this regard, our losses for Q2 in the oncology space, and including Milan, has been 3.7 crores. Yes. And we do believe it is significant. It is on the increasing trend. Even when you look at Borivali or Nagpur, both have significantly decreased on a quarter-to-quarter basis also, and we'll continue to see that. As I said, we are hoping that the way things are going, break-even will happen in Q4 or Q1 of next year.
Sure, sir. Sir, with respect to the debt, I understand a large part of this debt, primarily comes from, the newer centers. If you did, pass a command that, part of the future capex is also included in the current debt. So if I can, get some idea with respect to, because I think the debt has consistently been moving up. So where do we expect the peak debt? Do we see that probably this is where the peak debt is, and as Borivali starts contributing to profits and other centers start contributing to profits, the debt will start coming down. Is that a fair assumption?
Yeah, as I mentioned earlier, we have come almost to the end of our capex cycle, and from here onwards, we expect the capex to kind of taper down. We expect and our debt also coming down. So by the year end, we see all the leverage ratios at the right level from a debt perspective.
But there are few commitments where you may see slight increase even up to the end of the year. The way we have structured and where already commitments are made is what we are going to fulfill. But as you said, Sudarshan, once the Borivali and few other centers turn profitable and few other changes take place, we expect the capex cycle to be over and the debt reduction to start.
Yeah. One final question from my side is, on the Milan side of the business. I think the last couple of quarters has been pretty soft, in terms of execution and performance. And I'm just trying to understand with respect to, what are the changes. I understand that we have taken a rationalization with respect to, looking at profitability, and other things. So, where are we as far as the benefits are concerned from this exercise?
I think from Milan, as I discussed briefly last time, we had few things which happened in the last first and second quarter, which caused a downturn. And now we have a new CFO who has joined a few months ago, Sudhir Bail, and under his leadership and the way we have structured even our existing centers and the new centers, we are beginning to see certainly ramp up happening, and we expect fourth quarter to be one of the best quarters. So with this in mind, I think we are well positioned for that. And also when we look at the future, like the year FY20, where systems have been put in place, where certain strategic initiatives we have taken overall are also definitely going to pay dividends in the year FY20. We are fairly confident about it with the new CEO being in place.
Sure, sir. That's it from my side. I'll join back the queue.
Thank you. The next question is from the line of Balthazar Florentin Lee from Sloan & Robinson. Please go ahead.
Good afternoon. Congratulations on another set of solid numbers, and it's always good to see the margin at the existing centres expanding. Can I just ask for a bit more clarity on the trends and the losses from new centres? If Borivali is due to break even in the next couple of quarters and the losses are declining there, and we don't have any expansion projects planned for Q3, is it fair to say that what we've just experienced is peak losses from new centres and we should be thinking about a lower figure consistently going forward?
I think you're right. I think as we go forward, once the Borivali centre, the Nagpur centres break even, the centres which are going to be still in under losses include Jaipur and Rajkot. And then future is, of course, when the Delhi centre opens. So these are all the centres which are lined up. So only few centres will be coming up as per the plan. So with this plan, we expect the losses to narrow. Not only narrow, but also possibly the losses may go away if the Borivali centre, Nagpur, and the way Nasik centres are going. They will certainly contribute positive EBITDA to the whole group. So that may actually decrease the overall loss. That is how we are looking at. So in the next 12 months period, certainly that transformation is likely to happen. Excellent. And all the when you look at how we are positioned now, when you look at the EBITDA, like you see, existing centers EBITDA was 37 crores.
Yeah.
So obviously that existing centers EBITDA will normally they've been growing at about 10% or so. So that will continue to grow. And to add it to this will be the new centers contribution to the EBITDA. And as the losses get down, the losses will wipe out, the new profitability will also be added. So that is where the major upturn is going to happen as this transformation happens.
And you say over the next 12 months, do you have the visibility yet at when we might see this inflection?
So as I said, the two centers are either in Q4 or first of Q1 of next year, Borivali, Nagpur are going to break even. The only centers which are still going to be somewhat negative may be Jaipur and Rajkot. Jaipur will probably break even earlier, and Rajkot is the one which is newly started, which is probably going to take, we are still looking at the numbers, take another 6 to 8 months to break even. So that is why we expect second, third quarter of next year when we'll start seeing most of the centers being more positive at EBITDA break even. Usually in our scenario, as we have stated before, it takes about 12 months for any center to break even. So one exception have been, as we have stated, is Borivali center because of the high rent. Otherwise, normally 12 to 14 months they break even.
Excellent. Thank you very much. I'll go back into the queue for any additional questions.
Sure. Thank you very much. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from the line of Arshad Muqaddam from Vibrant Securities. Please go ahead.
Yeah, hi. So my first question is regarding the Mumbai center, the South Mumbai center, which is planned to open in Q4. So I think a few quarters ago, this was supposed to be open in Q4 18, but now it's been pushed to almost a year behind. So what's the reason for this?
Yeah, I think the main reason has been regulatory issues, because we have put a bunker in already which was existing as a cobalt bunker. We had to strengthen that. The AARB required us to strengthen that with additional material steel, and we had to redo that, and that took a lot of time, and getting the approval from the AARB itself took time, and that was one of the primary reasons. And also we got a very new equipment called Radisac, and this Radisac is coming first time in India for us in Mumbai as well as in Calcutta. So that required a type approval from AARB. Type approval is the first time any equipment comes, it takes a long time. itself may be 3 to 4 months for the ARB to look at it, and actually they have to make a physical visit and approve that. So these are the two factors which was not under our control, which caused the delay. Now I think we are almost in the final stage, and Dinesh, you want to add?
We should look at starting our outpatient services by the Q4 of this physical.
All right. Okay, my next question is regarding, I think while answering a previous question, you had mentioned that the capex had peaked out and will start to decrease from now on. So are you saying that after the launch of the Mumbai and the Kolkata centers, are you saying that for the next 2 years or something that we won't be planning on opening any more centers?
No, there is a couple of others, few things are in the works. For example, as I mentioned, the Q4 assets also, you may see a slight increase in the debt because of the Mumbai center and all coming there. Then we have in future, the centers we still have is New Delhi, the Delhi center, the Gurgaon center. And there is also, we have some plans in the Kochi center. So if that happens, that will be one more center. Otherwise, most of the capex cycle will be done, and we don't have any new either greenfield or brownfield centers planned. In answer to your question for 2 years, yes, we would like to be in a consolidation mode as far as the oncology is concerned. So we are certainly looking at, consolidating these centers. That is our plan at present.
Okay, that sounds great. So now if I could just ask another question regarding Milan. Responding to the previous question, you mentioned that we appointed a new CEO and now the business is supposed to pick up going forward. And if I remember correctly, last quarter in the Concall, you mentioned that it was the absence of a prominent doctor was the reason for the degrowth in the revenues. So, is this a business reliant on doctors? Like, if the doctor leaves, then will that affect us?
Hello? Yeah.
Yeah, so I want to know the dependence on the doctor in this business. Is there the risk of doctors leaving us in the business degrowing?
No, like I told you, the way previously, as I mentioned, because of a prominent doctor due to personal reasons being not available, affected the region in the Bangalore. But now with the new CEO, we are now institutionalizing entire Milan. As you know, Milan has been rated number 1. And when we merged, when we took over 51%, our other partner is Dr. Kamini Rao, who is a very well-known leading fertility specialist. That's the reason we took. The transition from that to institutionalization is what we are trying to do with the new CEO being in place. In this regard, we have actually now not only in Bangalore, but we are also in Delhi and Chandigarh and few other places to make it a national entity and institutionalize it. In this regard, we have created a different doctor model, and with this new initiative of different doctors, several doctors being there as consultants full-time as well as visiting, these changes is what will make it institutionalized, just like we have done for HCG, and that is what we are good at, and that is what we will achieve in the next few quarters or so.
Okay, that's good to hear. And one last thing, could you just explain to me what exactly is meant by IVF cycles and new registrations and how that's linked to revenue growth going forward?
IVF cycles.
It's given in the presentation.
Sudhir, can I explain?
What's the question?
IVF cycles and how does it impact the revenue?
Registration.
Registration or number of cycles, IVF cycles?
Yeah, so I just want to understand how those affect the revenues going forward.
Yeah. That one, IVF cycles.
If you look at the registrations, typically a new registration to a IVF cycle lead time is 60 to 90 days. And whenever we plan for IVF cycle, we focus on increasing the registration patient OPDs. So if you look at new registration Q2 versus FY19, it is 1394, which has shown a 15% jump. And because of which our Q3 and Q4 revenues are expected to be higher due to higher IVF cycles. Does it answer your question?
Yes, that helps quite a bit. Okay, thanks a lot. That's it from my side.
Thank you. Before we take the next question, a reminder once again to our participants that you may press star and 1 to join the question queue. The next question is from the line of Chandramouli Mutia from Goldman Sachs. Please go ahead.
Hi, good evening. Thanks for taking my questions. The first question is on just the absolute EBITDA that you've reported. Is it right to understand that you have included the government grant revenue in the reported EBITDA number of 36 crores on the PPD?
Yes, please. We have included, yes.
Right. And is this government grant amount, I think the first half it's about 11.5 crores. Is this recurring item going forward into the next quarters?
Yes, it will recur in the subsequent quarters also.
Right. So I don't think this was there in the previous year, right? So if you could just give us some color on why this is now a new item in our revenues.
It was a change in the method of accounting as per the new standard. Earlier it was shown as part of the revenue. As per the new standards, it has been shown in a separate line. That's the reason why it has been shown like this.
And as you know, these accounting standards continue to change. You will also see changes next year, where there will be some changes related to rental. So next Q1. So these changes is what we go by, what auditors advise us to do.
Just for the sake of clarity, it's not 11 crore, it is 1 crore.
Yeah.
Right. Thank you.
It's a small number, yeah.
Yeah, I understand. Yeah. 11 million, sorry. I think second question is just related to Rajkot. So you mentioned that it's a 120-bed multi-spec facility that you've opened in Rajkot. So if you could just give us some color on what the ownership structure is there, what percentage you own, as well as what percentage of the beds have been opened as of now.
This Rajkot facility just started, was inaugurated only about 2 weeks ago, okay? And it is a doctor's partnership model where the doctors are 26% partner. Most of the doctors are very leading practitioners of cardiology, nephrology, and pulmonary medicine, ICU, as well as primary physicians. Very good group. In fact, I personally visited them and met all the doctors at the time of inauguration. And very motivated, and the hospital has a very good name now. They all were having good names, so we expect the hospital, which is run under HCG, is going to have a very good name. And at this point, it is very initial stage. So we expect, as you said, the growth to happen in the next 4 to 6 months. And the center manager, the business head of Gujarat, are quite optimistic about the Rajkot project.
Right, thank you. And then the third question is on Kochi and Delhi. Right, so I think in your presentation it looks like Kolkata and South Mumbai should open in the final quarter of this year, which leaves just Kochi and Delhi for next year. So could you just give us some perspective on whether it's likely to be first half of next year or maybe back-ended? Because I think there's quite a lot of new facilities between now and the first half of next year.
Regarding the Delhi project, I think it is going to take, we are going to give guidance once we get all the regulatory approvals. Because as you know, regulatory approvals is always uncertain, and because of the type of center we are building there, we have done a lot of work, like soil testing, water testing, a lot of issues have done. So we are waiting for the ARB approval. Once the approval comes, I think we'll be able to have a better guidance to you and regarding when the project will take off and how long will it take for us to complete the project. But if the approval comes, we expect about 18 months. Anant, you can come closer. Anant is the project director. You can give on the.
I think if the approvals come for Delhi, I think we should see sometime in 12 to 15 months kind of a time frame, which I think once we have clarity will give guidance.
As you know, the initial build is done by the local partner. So our main requirement of capex will be only technology, am I right, Anand? Which will happen in the.
That's correct. Most of the money that will be used will be when the building is ready and when we ready to put the equipment.
So we are looking at nearly 2 years, 2.5 years from now, when the finances are required in terms of technology at that point for the Delhi project. For a Kochi also, we are the same way. The building is being done by the owner of the building. So we are also looking at when the approvals will come and the building will come. Once we get some clarity, we'll certainly inform.
Right. Thank you. And if I could just squeeze one last question in on Strands. Looks like last year versus this year, we've forgone a lot of profitability from the merger with Strands, because we had profit in our entity, which now is minority in Strands Equity. So if you could just give us some clarity on when you expect the joint venture with Strands to break even on an EBITDA basis?
Yeah, as you know, Strands is a different company. We are about 38% owner of Strands. We also have a private equity investor. So the whole idea behind the Strands was the growth of the company in terms of revenue, which is very important for us. And we expect combined revenue to grow significantly. We expect the combined revenue growth to be nearly like 35-40% this year. And also, you might have read that there is a Quest acquisition which we have announced. That also will add to our revenue. So the reason I cannot definitely tell you when the break-even happen is because of the Quest acquisition. So that has to be factored in before I can have a definite guidance on when we'll break even. But as it is now, we are expecting that next FY20 stands to break even. But now with the Quest acquisition, we will have to redo and see when it will happen. But it is we believe it's a good strategic acquisition. It gives us a pan-India presence. And also there is enormous interest in our bioinformatics analytics happening. So we see all around very positive in terms of what is going to happen with Strands and the future growth of Strands.
All right. Thank you very much and all the best.
Thank you.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. Ladies and gentlemen, if you wish to ask questions at this time, you may press star and 1. We will wait for a moment while the question queue assembles. The next question is from the line of Harit Ahmed from Spark Capital. Please go ahead.
Hi, good evening. This new center at Rajkot, just wanted to confirm that it's a multi-speciality hospital that you've opened there?
Yeah, at present it is a multi-speciality hospital with the possibility of adding oncology there. We are going to be doing medical oncology as well as surgical oncology now, just like we did in Bhavnagar. We are looking at in future a possibility of adding linear accelerator also. But oncology in terms of, as you know, there are 3 branches. Medical and surgical will be there as of now.
Okay. So far, most of our new centers have been in the oncology space. So, are we open to looking at more multi-speciality tertiary care hospitals going forward? Or is this like a one-off?
It is really one-off. As you know, our when you look at our revenue model, nearly 80% or so is coming from oncology. And as you know, the number of centers which are opening in oncology, we see that as a growth in oncology. But Gujarat is the exception. Gujarat, where we have most of our multi-speciality hospitals, including the first one which started there because of the fact that we couldn't convert that into oncology. With that experience, our Dr. Bharat Kadvi, who heads the business head of that, started also the center in Bhavnagar, which was shut down and was acquired and doing well, and we have added oncology. Similarly, with a group of doctors we are doing in Rajkot. So as you said, it is one of those centers coming up in Gujarat. But as a platform, we certainly do not have plans to do multi-speciality like we have done in oncology. So it will be on a very selective basis, if at all.
All right. And the finance cost for the quarter, what is the MTM loss on account of restatement of loans included in that number of 24 crores?
8.9%. So
8.9 crores.
8.9 crores.
Okay. Yeah. And one last question is, I know you don't share the profitability at Milan level, but just wanted to check if the EBITDA margins there, we are in a positive EBITDA margin territory at the subsidiary level, at Milan level.
At present, definitely it is a profitable level. It has always been at a profitable level, EBITDA margin, and we expect it to increase as we go forward.
Okay. That's all from my side. Thank you.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. Ladies and gentlemen, for questions, you may press star and 1 to join the question queue. Participants who wish to ask questions can press star and 1. Next, we have a follow-up question from the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, thanks for taking the follow-up. So the first bit is on Rajkot again. So could you just tell us what amount of capex you had to spend related to Rajkot?
It's about 15 crores or so, 15 to 20. But the most of around 15 crores.
Right, and this is largely equipment.
Largely equipment. As you know, we have a 26% partner also. They would be sharing in this.
All right. Makes sense. And second bit is just capex going forward. So I think you did mention in the opening remarks that most of the capex for this year seems to be done. There might be a little bit in the final quarter. Could you just give us some clarity on how you're looking at capex maybe for FY20 and beyond, given that there's this Kochi and Delhi facilities in there?
Adam, can you repeat the question? Somehow I missed.
Yeah, just looking for clarity on what the quantum of capex outgo could be in FY20 and beyond, given that the Kochi and Delhi facilities are in those years.
Yeah, as I said, those are the only two. And, we are, as you know, from Q1 to Q2, we had 40 crores. 41 crores in Q2. And we expect it to be at the same level in the coming quarter or slightly tapering down in the coming quarters. That's the way we see the trend. But as Dr. mentioned, regarding Kochi and Gurgaon, it's, as and when it happens, we will come back to you with a specific number.
All right. Makes sense. Thank you very much.
We can't commit any number because you will build up.
Thank you. Participants who wish to ask questions may press star and 1 at this time. Ladies and gentlemen, if you wish to ask questions, please press star and 1. Next question is from Harith Ahmed from Spark Capital. Please go ahead.
Right. Thanks for the follow-up opportunity. Again, on the Rajkot Center, who owns the land and building at this facility?
Land and building is owned by the doctors, local doctors and some partners they have. And it is a rent-lease model.
Okay. And I missed the capex number for this.
Capex will be somewhere in the region of about 15 crores.
15 crores on the equipment.
The overall investment from our side.
Okay. But this seems to be a bit on the lower side, given...
Yeah, that is because we are working with a group of doctors and they are also 26% partners. Okay? So our share would be so much.
So which we have already incurred.
Yeah.
Okay, thanks.
Which what?
Thank you. Participants who wish to ask questions, please press star and 1.
Yeah, I would like to correct on the capex of Rajkot that it will be more in the region of about 25 crores to 30 crores. We checked on that. I'm sorry about the mistake. This will be including the 26% contribution from the partners. So ours will be 74% of that.
Thank you. Participants who wish to ask questions can press star and 1. Ladies and gentlemen, for questions, you may press star and 1 on your touchtone telephone. As there are no further questions, I'd like to hand the conference back to the management team for closing comments.
Thank you everyone for the active participation on the call. We wish you a very happy Diwali and we are available to discuss offline if there are any further questions. With this, we conclude Q2 and H1 FY19 earnings conference call. Thank you.
Thank you very much.